Welcome to today's episode of the Insurance, Life, and Everything in Between podcast. My name is Adam Brsan.
And I'm Chris Smith.
If you've yet to do so, hit that subscribe button so you never miss another episode. And if you love this podcast, don't forget to share it with a friend or colleague. We greatly appreciate your help and support.
What the hell happened to the renewals? Like, where'd they go? What happened? Where they? Oh, welcome back to another episode of Insurance, Life, and Everything in Between, where over the course of the next 22 minutes, we're going to tackle as many topics as we can, including things like what the F happened to the renewals, market correction in Medicare, a new administration that potentially may bring back a more common sense CMS. I don't think we'll get to that in 22 minutes, but we'll see. Appreciate you guys being on. And if you're on right now, comment below. If you don't comment below, it's not nice. It's not. Like, why are you watching if you're not commenting? I really don't understand it. If you're not watching, okay, that's fine too. But comment below if you're watching at this moment in time. Nick, appreciate you.
At the very least, throw like a like or something on there.
Yeah, something. Let us know that we're not talking to ourselves. Speaking of talking to ourselves, I started my agency call Monday, talking to myself. I had the mute button on for 6 minutes.
Talk
about a moment of panic when I realized I was actually talking to myself, like on YouTube.
Oh, wow. So my question is always like, did you go back and try and recreate the 6 minutes that you had lost, or did you just keep plowing forward?
That was the whole open. Like the whole open was lost to oblivion. Only the cat heard my open for Monday. That's okay. It's okay. So we're having the renewals. I feel like all these new generation final expense products are coming out, which is nice. They've entered the modern era of an instant decision. Thank you. But the renewals are like, what happened?
I don't know. I don't know why companies have decided that renewals don't matter. I suspect. I don't know. This is a guess. An educated guess, but a guess. I suspect that companies are being told by IMOs and agencies alike that in order to maintain a competitive edge and be able to get the best sales agents, that they need to be able to offer the highest comp possible. And in order to offer the highest comp possible, it's cutting into their spread. And so they need the carrier to pay an overall higher level of comp, so that they can offer high street level comps to agents while still maintaining enough spread to be profitable. And at a certain point, something's got to give. And the agency doesn't really care if there's renewals. The agency doesn't care if people stay on the books. If people don't stay on the books, better for them. Their agents are just going to go rewrite it. Probably not with the same company.
Well,
just go rewrite it.
Well, the problem is that so many agencies are on the churn and burn model, where they're replacing 93% of agents every 12 months anyway.
They don't care. The agencies don't care. And the agencies are asking for higher upfront commission because it makes them more competitive and it gives them the recruiting edge. And listen, you see this. If you're on social media, if you're on Craigslist. Craigslist doesn't exist anymore. What is it? Indeed now? The job hunting sites. If you're on the job hunting sites, and you're reading about like life insurance sales jobs, you're seeing people saying, we're going to offer top compensation. We're going to offer 130% contracts. And hey, like people are okay with it in the term industry, right? Why would they not be okay with it in final expense? Give us 130% upfront contract and go sell somebody who's 77 years old and might die in the next 3 years. And so, you only make 2% renewals instead of the 6 or 7%. That used to be standard.
Yeah.
Right. Not that long ago. Like I've been doing this a long time relatively, because there are not very many agents who stay in the final expense business for very long, but I've only been doing this for 11 years in January. That's not, in the grand scheme of things, that long. 2013 was not that long ago. Like 5 to 7% used to be the standard renewal.
Street level. Yeah, street level.
Just
renewal.
standard street level renewal.
That's not even 2 levels up.
Yeah, no, that's standard street level renewal. 5 to 7%. Everybody offered that. Now companies that are offering like 7% renewals those are the high paying renewal companies. It used to be the high paying renewal companies were paying like 12 and 13%.
I remember the old UHL contract that predated me that had double digit renewals on a viable final expense product at the time.
A surety? Man,
Oh,
a surety like had a 20% renewal once upon a time and paid 120% first year commission, and it was a good product.
Yeah. But see, here's the problem. I don't want to hear carriers talk to me about persistency anymore if their renewals don't justify it. And I don't want to hear about them talk about persistency if not only do the renewals suck, but the process to service the business sucks more.
Mm-hmm.
Like we've had 5 years of technology improvements from the initial Americo application, which it was good looking. Like the new one now, I don't like it. The old one was classic. We had progress all the way into the iCover generation where everything is really easy.
Mm-hmm.
But the process to service business still sucks. Like why is there not an instant decision service process where I can do click, click, click and my stuff's serviced? Because if you're paying me 75 cents a month, like, what am I going to do?
Why am I going to help?
Why?
Right? Why? So,
I mean, the morality of it, sure, I'll try, but like, why?
Like, no joke. Where's my phone? I left my phone in the other room. But, oh no, I put it over here because I didn't want it to buzz. Like, let me take a look. When I got this text message, I think it was yesterday. It might have been the day before. My friend was texting me and was like, I have been on hold with Transamerica for 3 hours because my client, who has had this Transamerica policy for 6 years, wants to change their beneficiary because they got divorced.
But that's just a form, though. Like, you just fill out the form and upload it.
Right. But I don't remember. I need to see why. There was a reason why they needed to talk to somebody. There was like something.
Fair enough.
So there was a thing that had happened where like they needed to actually talk to somebody. And this is why I was trying to find the text message on my phone because
that's
it was something. Because it was something weird, and it was, and I remember just being like, why? Like, does it really matter? Like, can you just like I thought at first he was trying to get information to do a replacement. But anyway, I'm not going to take up time looking through stuff through my phone for stuff. But he was on the phone for 3 hours trying to get this resolved for his client, and this was on a Transamerica contract that used to pay renewals. Like those Transamerica products paid. Like you make decent renewals on the old immediate solution product. But like, I don't know, man. This new Express app that pays like 1% renewal, the Americo that pays 0. Like, am I right? Is this new Americo product paying 0% renewals, or is it like 0.5% renewal or something?
So,
like,
for the sake of not damaging relationships, because you have to speak kindly about every carrier there is, because the people that make decisions do watch the videos.
Sure.
And some of them get on videos and do it with us. Steve Weber, for example. I think my level on the level I've seen, it's very low on the preferred tier. There are no renewals on the standard tier. No renewals on the modified tier. And
here's the thing.
It almost reminds me of an old NASB contract where the original Americo contract had the renewals kept at the top. And I thought for myself for a second, are they just keeping them at the top? If so, that would make a logical sense. But it's also like it's not any higher first year commission. So the renewals have to be somewhere. Like the actuaries that build these products and price comp into the product, it's not like it's 60% lower, first rates or 60% higher first year commission. It's the same math formula, except it's missing like this piece of the formula. So where is it?
If you're not paying me to service the business, why am I going to? Why would I not just say, sorry, Mildred, here's the number for the company. You're going to have to wait on hold. I don't do that.
Yeah, I don't
because
do
there's
that.
no upside for me to help them.
I'm not a charity.
I've already sold them, right?
Yeah.
When something falls off the books, when a payment gets missed, when I've got an Oxford policy that this guy's had. I haven't written Oxford in 5 years. But I have an Oxford policy with a guy who missed his payment, and and Oxford's renewals were terrible to begin with. I think it was like a 3% renewal. And so I'm making 95 cents a month on this guy, and he missed his payment. And I got a notification that like I'm going to get a 95-cent charge back because he missed his payment unless I go and conserve the business. And I'm going to tell you, I don't go down to the area where he lives anymore. I've stopped working in that area of the state. I'm okay without the 95 cents a month. I really am. Like, I'm not going to go save that. I'll call him. And if because like, I feel like morally, I need to at least make sure he knows that he's about to lapse his policy. But I'm not going to go save that. And if I was going to go save that, I'd probably rewrite him with somebody else at this stage.
But let's look at there are products out there, and we have never had this debate publicly, I don't think, or just discussion on the home service model that have 30, 35, 40% renewals on a product priced a little bit to standard. John Duggar would never write it because it's not the cheapest, but I would just love to do that jab at him. But the concept does exist. I mean, they don't pay advances. The first year commission is not that high. But at some point, this has got to give. Otherwise, we're all going to go write Medicare just so we could actually have a renewal business.
Well, and so the thing about the home service model that doesn't work for most final expense agents.
But it's not home service really anymore. It's still ACH. Right. It's still auto draft.
Right. No, and I get that. But the thing about the home service model is the upfront commission is so low for so many of those contracts. And it also, that did not used to be, right? It used to be like, we can go back to like the insurance panel show that we used to do where we had debit agents come on. We had Everett come on, who's a debit agent still. And like, it's a little bit less upfront, but like you're still on like an 80 or 90% contract with a 30% renewal. And like, I can almost see making that work. But the thing is, when you're working a debit route, if you are a home service agent, if you're an actual home service agent, your persistency is going to be very high because you're working a very, very, very small area and you're going back and seeing all of those people very regularly. And it's a different business model than the final expense agent. And maybe that's the fault. Maybe that's the problem, right? Maybe the problem is final expense agents have leaned so heavily into one call close mentality that it is one call, never talk to you ever again, under any circumstances. And that's a mistake. Maybe, I haven't really thought this through. But maybe that is the mistake. Maybe that's our mistake. Maybe we should all be working much, much, much dramatically smaller areas and going back and seeing our existing clients and touching base with them once or twice a year to make sure that they do stay on the business and they don't get replaced.
Which is absolutely never going to happen in a telesales era. Absolutely never going to. But and look at it even from a direct mail era. Like direct mail is so much more expensive to work at so much closer area. It almost makes more sense to get a higher intent final expense Facebook where you're less likely to be in that area less often. Like it's all of these things are not.
They're like at cross purposes, right?
Yeah.
So I don't know. I don't know what the answer is. I think you're right though. I think it is the rise of the final expense telesale that is crushing the renewals because they're not going to be doing the service work anyway.
No.
So why pay them the renewal? And I think that's legitimate. I think that's a big part.
Then have a separate pricing structure for a telesales product or a separate commission grid. I just
give agents the option. Give them the option. I will tell you. I will take a 110 with every day of the week. I will take a 110% contract with a 7% renewal over a 130 with a 1% renewal every day of the week, twice on the week. Like all the time.
I figured, there's a happy medium on this, and it's a lot of it's personal preference because I negotiated less renewals for higher first year commission on a product with low commissions anyway. But remember the current Aetna product, the actual Aetna, not the Ascendo,
Right.
has
The
like a
protection series.
85-9 or 90-10, something like that. Don't quote me on it. Kind of comp structure. And I did the math on that one day. And if the policy stays on the books 5 years, you break ahead on that versus the other compared to like an AMAM contract. But what if the carrier said, you can have the heaped model, as Tyler Reese would say, 131 or whatever it was. Or you could have a levelized version, like you tried to build out in the Bankers Fidelity product, where it was like, I don't know, 40% forever, something like that, like 40% literally forever.
Yeah, but that's
what if they at least gave you an option at the commission level?
If you gave me an option where I broke even at 4 years, where like at 4 years, that's what I would want. I would want at the 4-year mark, I have made the same amount of money regardless of which option I've chosen. But then at 5 years plus, you've made more on the renewal option.
Yeah.
And then at 4 years and less, you've made more money on the heaped option. It's at that 4-year mark that I would want it. The problem is every product that has come out that has done this kind of levelized renewal product has built it so that the break-even point is at like year 7. And that's not work. That doesn't work.
Yeah.
And you're selling final expense. Too many of them are going to die.
Oh, yeah.
It's just the mortality rate is just too high.
For whoever who's still listening in, I want to take the last 6 minutes and discuss something without naming the carrier, because this really has a lot to do with renewals. There's a carrier out there that has in their contract, this is an independently distributed product. It really doesn't get distributed all that much anymore, and it probably shouldn't while this is in the contract. That says if your lifetime renewals, Nick, fall below 65%, your renewals cease.
Yeah, I know the contract you're talking about, and that is BS, my friend.
It is, because what if, like Settlers, the product was discontinued and the carrier exited the market, which is honestly pretty normal.
Yeah,
your lifetime renewals
five carriers in the last year.
Yeah, your renewals are going to levelize into the 50-60 range back by reality of it.
Yeah, because you can't.
Now they're going to stop paying you.
Yeah, yes, they will. Yeah, they're going to stop paying you. That's exactly what they're going to do. They're going to stop paying you.
I totally get it. If it says your lifetime renewals drop below $50 a year, whatever. F it at that point. You should have sold your business, or $25 a year, or whatever those like $100 a year stipulations are in the contract, where it costs more for them to send the money than to pay the money. But 65%?
Yeah, it's bullshit. It's nonsense.
Literal bullshit.
Yeah. I mean, listen, there's a very popular telesales product that charges back 100% for deaths within the first 2 years. Not a graded product. First year benefit coverage, super popular.
Don't die.
Probably one of the most sold telesales products on the market right now.
I don't
die
sell
in the
it.
first 2 years. It's 100% chargeback. If you don't keep the policy lapses for any reason not related to death in the first 4 months, it's 100% chargeback.
We dug our own grave on that. A lot of the 4-month chargeback rules were from shitty persistency.
Yeah, I know. Listen, we've got to do better. We have to own up. Some of this is our own fault as an industry. Absolutely. And I don't know what to do, because it's not like you and I and several other people in the industry have not been screaming about this for the last 6 years.
Mm-hmm.
Right? We started talking about how as an industry we need to be doing better in 2017 on various things like this, right? It's not like this hasn't been a thing that's been being talked about. It's just nobody's listening to us. And there's so many new people that come in all the time, and they fall under this MLM model. And it's not just the 3-letter IMOs. There are so many people who are building on this churn and burn model.
Mm-hmm.
I mean, what are you going to do? I wish there was some sort of centralized organization that spoke up for and with the voice of and was run by actual final expense agents that could lobby on our behalf towards the carriers. But this sort of a thing does not exist. And I'm going to tell you, if any such thing was proposed, so many final expense agents would push back on it. It would never get off the ground. It would do us all a lot of good.
part of the churn and burn is not necessarily people that quit, but people that hop from one place to the next every time their feelings get hurt, or they think that the next person has something, massively different. And I think winners are going to win no matter what, and losers are going to lose. But turning from one place to the next doesn't help this bigger problem either.
People who should never have been hired in the first place is really what it is. It's people who do not belong in this business. There are so many people who get sold on the idea of come in, work very little bit. You're going to get leads. You're going to sell everybody you talk to. It's so easy. You're going to make millions. Final expense is one of the hardest sales jobs that exists. You make really good money. You get paid really, really, really well. It's a great job. It's a really good industry.
For the first year.
No, but like it's a really good job. Like it's a really good industry to be in. But it is not for most people, even people who think that they're good at sales. Mostly are not actually a good fit for this job. And it is not in the financial best interest of the people who are recruiting to weed those people who are not a good fit for this industry out. It is in their financial best interest to bring them in, get them to sell as much as they can, and then push them out. Don't let the door hit you on the way. And it is a fundamental flaw in the model. I don't know what to do about it. Yeah, I don't have an answer.
No model's perfect, but the fact is, I had an agent who rolled debt, ironically, who failed out of the business, ironically, say something to me that was actually pretty true, which proved he could have done it if he would have done it right. Mm-hmm. He said most problems are you problems. And this is a you problem you're suffering with right now. I had a guy recently leave our free lead program to go work with Digital BGA. I mean, winners are going to win no matter where. Yeah. But like, just because it was a little hard for 3 weeks in the field doesn't mean it's going to be any easier on the phone.
Ooh.
Harder on the phone. It's harder.
If you're working face to face, you've got a cheat code right now. There has never been an easier time to sell face to face.
Yeah.
There are so many people doing this over the phone. Like you are like, it is basically collecting free money relatively. Mm-hmm. Like, look at me out here. I'm doing it, saying it again. Like it's so easy. It's not, it's breathtakingly difficult to sell face-to-face final expense.
Yeah.
Not nearly as difficult as it is to sell final expense over the phone. It is as breathtakingly difficult as it is face-to-face. It's like 4 times as difficult over the phone.
It's insane. Like I texted Pete Fournier a couple months ago, asked him about a lead vendor that he had sponsored, which is probably a great lead vendor. Mm-hmm. I said, what was your experience? And he said that a lot of the folks that pick up the phone, and it's not just Pete, I'm sure plenty of people would attest to this. I'm sure Jeff Root would vouch for the statement. It's just sick people. Like there's only so much GI you can write before you end up underwater.
Yeah.
Card players. Like you think there's a lot of chime business in Baltimore. Like the sickest and least healthy, responsible individuals are answering telemarketed. Yeah. It's crazy.
Yeah, it's awful. It's hard. It's hard. And if you're willing to go out and knock on doors, you have given yourself an automatic unfair advantage. Automatically. You have put yourself in the top 5% of producers just by being willing to walk outside your house.
Walk outside your house. God, if I actually had 5 days to knock 25 leads, like it was 2016 again, with like the lower level of responsibility for an agency, it would be stupid easy.
Like I know, like the days, like
not hard. I'm like easy in like the strategic sense. Like this is still hard. That's
like mindless, like simple, not easy.
Very simple. Yeah,
so simple.
We got the card you qualified for. I just need to go over it with you. Okay.
Yeah, just go do that 12 to 15 times a week. Right? Just 12 to 15 times a week. You will make hundreds of thousands of dollars.
Oh my gosh. If people realized all the true ups that were in my backyard from people that literally, when they call 1-800 numbers, are told we can't help you on Medicare.
Yeah.
Go out and see these people. I need to do a 265 campaign. I found like 3 of them by accident last month. What are you talking?
Just go see the people. Just go talk to people. Like, I don't know. I don't want to get on like bitching about agents that I talk to. Like I've got agents who are getting for free inbound Medicare leads right now, and are complaining that so many of these people are just wanting to talk to them about a free food card.
Okay.
And I'm like, I don't know how you're not converting Those
Awesome.
people.
I've got several of those.
I don't know
We'll
how
mail
you're
it
not
out to
converting
you.
those people.
Would you like that, or would you like the money back into your check part? Which one do you want
Yeah.
me to talk about today?
Like I don't know. Like they want something. They called up and they told you that they want something, and you can give them the something that they want. I don't know why you're not converting. Why are you mad about this?
Oh my gosh. The moral of the story is pay us renewals. Like, if you want your product to have persistency, we got to pay somebody.
Yeah.
Make the process easier. Like, if you want us to service the business, don't make it like an act of whatever you pray to service the business.
Yeah.
And we need to do better in the business so that they can do better in the business, because it really is just a three-legged stool. What's best for you and your agency? What's best for the client? And what's best for the carrier in some type of collaborative sense?
Yeah. All right. Well, we didn't get through most of your list, so we've got things to talk about next week.
Oh, well, we'll talk about Trump next week. Take care, guys. Appreciate you watching.
See you.
And this concludes another episode of the Insurance, Life, and Everything in Between podcast. If you like what you heard, don't forget to subscribe, share with a friend or colleague, and if you have any comments or suggestions for future episodes, please leave those too. Any input is greatly appreciated. Thank you.